Welcome back. In conversation now with the management of BLS International that reported a very sharp expansion in margins for the second quarter. Revenue growth has been flattish though on a quarter-on-quarter basis, both in visa services and the digital services business. To discuss more on the quarter gone by and the road ahead, we are being joined by Shikhar Aggarwal, who is the Joint Managing Director at BLS International. Shikhar, good morning. Thank you so much for joining in. I wanted to start off by asking you about the visa revenue growth, which was around 30% on a year-on-year basis, and this despite volume growth and net revenue per application being in excess of 40%. So what kept the revenue growth in check during the quarter, and what's the picture that you're seeing for the second half of the year?
No, if you see overall the revenue, the quarter has grown 21% compared to last quarter, last year, and the visa revenue has already grown more than that. The volume, of growth of visa applications has been 40%, and we've also seen revenue growth in that. Quarter two normally is a little subdued. Quarter one and quarter four is the highest in terms of revenue for us. But still, if you see on a year-on-year basis, we have done a 21% hike in revenue and around a 90% hike in EBITDA. And the margins have also expanded to 33%. So we feel that we can maintain these margin levels now.
So you will be able to maintain margins at these levels of 33%, and revenue growth, what does it look like in the next half? Will you be able to do 20% or better than that?
See, definitely, if you see in the last 5 years, we've done more than 70% of CAGR growth, and this quarter also, if you compare the EBITDA levels and PAT level, we have grown more than 70-80%. Revenue has grown by 21%. I think we expect to maintain that levels. Also, we have done a couple of acquisitions, as you know. The merger of iData has already happened in this quarter. We have seen 60 crores of revenue of iData come in. That too only on not full quarter working, because we acquired the company on 10th of July. So those revenues will fully come in the next quarter. Also the company Citizenship Invest that we completed the acquisition in October. So those revenues should also come in. So definitely we will see good revenue growth both from organic and these inorganic opportunities that we have done.
Excluding iData, what would be the visa revenue growth, Shikhar, for the quarter? And part two of my question is, you've moved from the transition from the partner-run centers to the self-managed ones that you guys have done. Now, how many of them do you have currently? How many of them are partner-run? What's the mix here? Or have you moved completely to the self-run base?
See, the volume growth from the organic business was 18%. So overall, we had a 40% increase in visa volumes. This quarter, we did 10.1 lakh of visa volumes compared to around 7 point something lakh in the last year. From iData, 1.6 lakh volume was added. So 8.5 lakh we did organically. So there was 18% growth in terms of organic volume. Also, we have majority of our centers are fully owned and operated by us. So I would say more than 70-80% are being operated by us. There are still certain geographies across the world where we are evaluating that, where we could shift, where the law of the land allows to shift to 100% owned entity. We are evaluating that. So that could also take place in the near future. But the margins, I think we grew from 21% to 27% and now 33%. So we first want to maintain and consolidate at this level. So we want to first maintain this levels of margin.
Okay, all right. This is about the visa business and how that is shaping up. But the digital business, that has been struggling in terms of revenue growth. The revenues are down 1% sequentially. It's down 6% on a YY basis. What's happening here? What's the outlook?
See, even in the digital business, we have actually seen organic growth. One of the contracts that got completed last year, we did not renew that contract. So revenue from that contract did not come in this quarter. In spite of that, if you see, our other businesses have made up for that. So we have actually seen growth in our banking correspondent and our e-governance business in different parts of India. So we definitely see a good future in our digital business. We also announced some acquisition of a company called Aadifidelis, which is a loan distribution company that the transaction should get completed within this month. So that will also add to the revenue and profitability of the company. But we are bidding for multiple tenders in e-governance, and our reach with business correspondence has also increased to more than 30,000 BC centers with more than 1 lakh touchpoints across India. So this company is fairly new, 5-year-old company, but we see good growth coming in the coming quarters and coming years, and even in digital business.
Right. What's the cash on the books currently, Shikhar? And you said that you have recently announced an acquisition. Is there more in the pipeline?
So currently, as of September, 6 months ended, we have around 900 crores of cash on the books. That is post iData payout that we've already done. So as you know, we are a negative working capital cash generating company. And another acquisition of Aadifidelis Solutions, definitely that cash still needs to be paid out. So once that is done, we first want to consolidate all our acquisitions. We've already started, combining some centers with iData across geographies. Our costs have started to come down. Margins in those countries have started to go up. So we first want to consolidate, and then definitely, we are looking, as we grow as a company, we are constantly looking how to best utilize the cash on the books. Since we are a negative working capital company, we have a good dividend policy, and we are also looking at more inorganic opportunities that can, value add to our existing business.
All right, so we'll watch out for those opportunities that you lap onto, Shikhar, and have a conversation later. But thank you so much for joining in today and talking about Q2 numbers and the way forward. That's the word coming in from BLS International, looking at EBITDA margins of 33% and will be able to maintain that growth level of 21 to 22%. With that, we'll slip into a short break. When we come back, we'll talk about markets and a lot more. Stay tuned.